Delano Sapporo is with us now from New Street Advisors, CNBC contributor. Delano, what do you think about Constellation?
Tyler, Constellation is one that I do not own, but if I was someone that was holding this stock, one of the things I would look at is that it's trading kind of expensive. You mentioned the staples sector. It's actually trading above where the average of the staples sectors is trading. But on the positive side, as Frank was focusing a lot on the beer, I actually do like that they have about a 13% market presence in the wine market in the U.S., which is obviously strong, and they have stronger margins and stronger cash flow on that side. What could give investors pause here is that they have a 39% ownership in Canopy Growth, which is a volatile company that trades volatile. So holding here, I think there may be a little bit of bump where people take profits if earnings are strong. So I would hold if I was an investor here.
All right, let's move on now to Conagra brand. Shares lower by about 3% this year. Food and grocery items seen price spikes because of inflation, but Conagra pointed to strong growth in its frozen foods and plant-based offerings last quarter. But with budgets tightening, will the positive momentum continue? Let's bring in Seema Modi for the story here. Hey, Seema.
Tyler, this will be an important read on inflation and the consumer. Last quarter, we did hear from CEO Sean Connolly, who said if and when a recession unfolds, you'll start to see the consumer spend less money outside, eating out less, and opt for cooking at home and spending more time inside the home. So the question is that exactly what he's seeing in the third quarter? And it somewhat echoes what we heard from Walmart CEO Doug McMillon over the summer, if you remember, where he said that the consumer is under pressure and in some cases is trading down, opting for canned goods. So that will be what investors look for when Conagra reports earnings. This is also a popular dividend play, Tyler, with a dividend yield averaging 4%. But now with the 2-year offering the similar amount, there'll be much focus about its buyback and capital allocation plan when the company reports earnings. I would point out year to date, stock is down, yes, about 2 to 3%, but still vastly outperforming its peers and the S&P 500's 20% decline.
All right, Seema, stick around. We're going to get right back to you. But meantime, Delano, what do you think here of Conagra?
Yes, Tyler, another one I do not own, but I like the valuation better, trading at 13 times forward PE. As Seema was mentioning, the consumer is a big play here, and obviously with the staples, you're looking at that. But they've done a great job of keeping that pricing power and battling any of the supply chain issues or any increased price production cost for on that side for them. And in July, management raised guidance. That was a strong sign. They were showing strength in the demand and demand keeping pace. So this is one that I would hold or buy if an investor has cash to do so.
All right, let's move on to McCormick. The shares are down more than 25% this year. The spice company cut full-year guidance last month, saying high inflation, supply chain woes. They're pinching profits there. Seema, can McCormick bounce back from this somewhat bland outlook and deliver a little pepper?
Yeah, not so spicy. But I will point out this was one of those pandemic beneficiaries when more people were at home testing out recipes, baking. We did see sales of spices rise. But this year, the story has changed in that supply chain issues, rising input costs, that has really dominated the story. The company has already cut its financial guidance for the year twice. So expectations are a bit lower going into this quarter. We'll see if the company can provide a story to Wall Street that, yes, in this environment where prices are rising, consumers are looking for more cost-effective options as they try to make dinner and make it work for their family.
All right, Delano, what do you say about McCormick?
I actually do like spices, Tyler, but this one I would be underweight just because some of the reasons that Seema was mentioning. You have higher costs, which has affected earnings last quarter. You have supply chain issues, which management is all realized and obviously said, and they're doing things to combat this. But they also have, China plant lockdowns that they dealt with last quarter, and they even mentioned demand softness, which is obviously a thing that investors don't want to see. So sales growth is not showing the same sort of strength you'd like to see. So this was one I would kind of be cautious on for investors.
All right, Delano, thank you very much. Seema Modi, thank you as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.